Hello. Welcome everyone to the closing playbook for Wednesday, September 3rd, 2025. Congratulations for getting over the hump of the week. We are in the second half, and since it was a holiday Monday for the market, it's even a shorter week, but that's okay. We'll still call it hump day. Good afternoon, everyone. Welcome here, James, first timer. This is going to be a little bit different than the opening playbook sessions and a little bit faster moving. We try and get some trades in before the market closes. And we'll have a special guest here. Let me get a little bit into the pre-show here. Well, hold on one second because I have to sneeze. Pardon me. All right, these things happen, especially when you got one of these things on your face. All right, so welcome to Closing Playbook. If this is indeed your first time here, welcome. This is a free daily live webinar that we do. It's normally pretty fast paced because we're trying to get some trades in along with like a little bit of education on the trades before the market closes at 4 p.m. But we also try and get some other content in as well, such as recapping the day, maybe a plan for tomorrow. Sometimes we go over trading concepts. Sometimes we have special guests like we will today. But before we get into exactly what we're doing today, if you're new to the platform here, just a couple of tips about using the platform. So if you see a login here button when you get here, you don't need to do that. You just need to put your name in to let us know how you'd like to be known in the chat and click join. You don't need to actually have a login for this. A couple of things about manipulating the presentation. In the top corner on the left, you've got the hamburger menu. That's a 3-line icon there that you can click to reduce the size of the green column on the left and give you a little more screen real estate for the presentation. In the bottom left of the presentation, there's a speaker icon, which is for muting and unmuting the presentation. So if you see us but don't hear us, double check, make sure that you aren't accidentally muted. In the bottom right of the presentation, there are 2 icons for controlling the size of the presentation. The double arrow icon will make it full screen, which will cover up the announcements and the chat and everything, but allow you to see as much detail as possible in the presentation. And then the other icon next to it is the picture in a picture icon. You can use that on some devices with some browsers, and it allows you to shrink the presentation down into a little floating window, so you can do other things at the same time, such as maybe go to your broker account in your browser and place a trade with us or something like that. So again, it is browser and device dependent. It definitely works on a PC with Chrome, but others are kind of hit and miss. So if you do want to take advantage of that, consider trying the Chrome browser on whatever device you're using. If you'd like to send a direct message I'm getting ahead of myself. Below the presentation, there is a slider called low latency. This causes, if it's yellow, it's on, and if it's white, it's off. And we recommend that everybody turn it off. You want it to be white. So the reason you want it off is because it'll give you a better quality audio and video feed. What it'll do on the downside is it'll just cause a few seconds delay in what you seeing what we're doing in the presentation. But a few seconds won't make a difference in what we're doing, but a good quality audio and video will definitely help. So we recommend everybody turn off the low latency. And then what I was about to say a minute ago, if you want to send a direct message to me or Nathan or Graham during the presentation, you can hover over or tap on any of our messages in the chat. You'll see some icons appear. You'll click on the double speech bubble icon like you see on the screen right now, and that will let you private message whoever you're clicking or tapping on. So if you tap on my message and private message me, I'll be the only one who can see it. You can ask a question without the whole crowd seeing it, or provide us with your name, email, phone, that kind of stuff without giving it to the entire group. And if for those who haven't seen it, we have a fairly new replays page from last week. It's updated with the most current replays going back to the middle of August. It'll be the library of replays going forward. So definitely keep this URL web address bookmarked and refer to it if you ever need to see something that you missed or see something again. And we also have a bunch of links in the announcements down below the presentation right now. You'll see all of these links there. The first one is the link you should be using to get to opening and closing playbook. The second one is what we just looked at with the recent replays, the new library. The third one is where you'd go to see stuff older than mid-August, and that will be a YouTube link. We then have a bunch of other links there, but since we're past 3:30, I'm not going to go into detail on all of them. We'll kind of skip ahead. You've got them there in the announcements below the presentation. Lastly, Nate and Graham are going to be out this afternoon. They won't be here, but we do have JD back. He was with us in opening playbook. We had a great session in learning about using value indicator and using PEG and a few other really cool things that Nathan and Graham normally don't go over, don't really do in their trading. So some really cool ways of looking at this stuff. And he's here to give us a couple of live trades since it is closing playbook and we are used to getting some live trades. We asked him to do that for us in Nathan and Graham's place. And then also, if you missed the lesson from this morning, he'll be going over that again. And he'll give us another chance to get into his 2 Sigma Trader program after we filled about half of the 100 spots that were open this morning. Got filled up after opening playbook. We had just a tremendous response and feedback from everybody. We had dozens of people taking him up on his offer, which is just an incredible offer today for everybody who comes to opening playbook. So without any further ado, let me get JD up here with us. Hey, buddy.
Hey, David, how are you?
All right, how you doing?
I'm doing great, thank you.
Do you have a chance to trade between these sessions to get in there and look at the market?
Yeah, well, busy as a beaver for sure, and this market definitely keeps us on our toes, doesn't it?
Yeah, it definitely does. One day down, one day up, but not up a lot, kind of flat today. Bouncing around at least in the green zone, right? Like at least bouncing around in the green zone, but not exactly a whirlwind, ride up by any means.
Well,
Let me take a
the
look and see
green the
what we
green
have in
zone
the. Sorry, go ahead.
the green zone is the magic color of the day, isn't it?
That's right. That's right. We have a magic color for your program. That's right. Let's see. Hello to everybody who's wishing everybody greetings in the chat. Let's see. I don't think we're having any trouble on our end. It seems like everybody else is able to see and hear us. So, Roger, you may need to just maybe refresh your browser tab. I'll type that in the chat in case you're actually having trouble hearing me. Let me just put that in the chat. All right, thanks, Joe. Filled SPY at 74, so put the target at 88 for the overnight. All right, let's see here. All right, I think that's just about it. I know we had a lot of people really stuck around for your entire presentation earlier this morning. A lot of positive feedback. I know you got a few dozen people joining, so hopefully that's all looking good on your end. And I know the people that were here were really happy that you brought this opportunity to them.
Well, David, it's so easy to do when it's your passion, and I'm so glad folks can join me on this journey. I think, as we mentioned in the presentation, I've been in the business for a long time, and part of my own discovery was wandering in the desert to find something that really could make a difference. And boy, I think we found it here. And so it's exciting to be able to bring it to everybody.
Yeah, awesome. Well, I know you've got a few trades for people before the market closes, some tickers to look at, and I know that you were going to go over some of the pieces of the lesson from this morning again as well. So if you want to share your screen, you can go right ahead and do that. We will
Yeah,
get that up here for everybody, and I'll let you take center stage.
Okay, well, let me find the share screen again. If I'm new to this program, so
Yeah,
Here's share screen. And this is the page I want to share. So hopefully that came up okay.
There we go.
And
Yes,
I want
sir.
to
We've
make
got your Yahoo Finance page.
we got my magical Yahoo Finance
Yeah.
page, and this is I'm going to share with folks a different iteration to the fundamental principles that we're going to be going over later in the presentation about Two Sigma and the magic of Two Sigma. I've been doing during earnings season not a back test, but a live test of a strategy that I think is really interesting. I've been sharing it with folks on Telegram, and one what we're doing here, I guess, just to back up, folks, is in advance of earnings, we're exploiting option premiums that arise from the event we love and know as earnings release day, and specifically placing trades with options that are expiring as near to the date of the event as possible, so you don't have to deal with time decay. You still have time decay, but it's not as big of a problem, and it does get drowned out by the excessive premiums that can arise in some of the stocks that are reporting results, and multiple iterations of how we're placing these trades. And the one that has been working really like a charm has been some call credit writing on companies that are reporting results, companies that are trading almost or above 2 standard deviations above the mean. And that's the chart I have here. Salesforce is reporting results after the market closed today. You can see it's bumping up to 2 standard deviations above the mean. So what I like to do here, David, on a stock like this, and again, this structure has been, the hit rate on this structure has been phenomenal. So I want to do it again here, and that is to sell to open a call option on Salesforce expiring on Friday, September 5th. And what I can do is go way, way, way out of the money. In fact, I can go up to $295, collect $1 for my effort. And because I don't want to do naked call writing, I buy myself some insurance at a strike above the call that I'm writing. So I sell to open the 295 call, I collect $1 for my effort, and then I pay about 50 cents for a 305 strike on CRM. For us to not collect on our 295 strike, I believe CRM would have to go up some 15% or something like that. So it's pretty remarkable. It would have to be a really remarkable pop. And with the market being somewhat overbought here, like I said, this particular trade structure has worked very, very well. So I wanted to give that to folks. It's a deep dive kind of iteration on the Two Sigma ecosystem that we've been talking about quite a bit here. And let me just, I'm going to stop sharing for a moment.
Yeah. What was the expiration that you were using on that call? On those
Yes,
calls?
that's the Friday, September 5th expiration. Okay. Now, you mentioned that we did a presentation this morning. This presentation that we did this morning, the first part of the presentation was regarding what I call the only number that matters for identifying stocks that have the potential to double in value. Now, the time horizon here, this is more of an investing perspective, so it's longer term, but it's still basically using one fundamental value metric. This came about from a study. We were in the money management firm that I managed about 25 years ago. We were really, really good at identifying stocks that would double in value, but our holding period was 6 years. And so I took it upon myself to try to improve that strategy, David, and look at all of the winners that we had and try to, instead of looking at a dozen or so, various value metrics, you've heard them all, the price to earnings, price to sales, price to book value, price to cash flow, et cetera, et cetera. I did a deep dive on these stocks that doubled in value, and I discovered something really remarkable that we shared with folks this morning, and I'll share it with you as well. And that is, there's only one number that all of these winning recommendations had in common, and that was the PEG ratio, price to earnings divided by profit growth. And so I took that PEG ratio and made it even more accessible. And by that, I mean, you can go on one of the stocks that I discovered in preparing for this presentation, Snap, SNAP is the ticker symbol. And what I'm looking for here are the...
Do you want to be sharing your screen, or are you...
Oh, yeah, I'm sorry. I'm not sharing my screen. My bad. So let's go back to that. And here we go. Okay, I've got the income statement up. That's not what I want. I want the analyst estimates on Snap. And what you can see here, and this is available on pretty much every publicly traded stock, I'm looking for earnings growth that exceeds the multiple that the stock trades for using current earnings estimates. So in the case of Snap, you can see here the company's expected to make 39 cents a share in 2026 compared to 26 cents a share in 2025. And so with what you do here is you just divide 39 cents by 26 cents and you come up with approximately 47% growth on earnings. Now, what does Snap trade for? Well, at $7.20, you divide that by the 26 cents a share that the company is expected to make in the current year, and you find you get a multiple of something like 26. I may be a little bit off and my memory isn't as good as it used to be, so I apologize if the math isn't quite right. And I don't want to dig up the slides for folks, but I just wanted to give you the gist. What I'm looking for here, again, is, David, if Snap is growing earnings at 46% and I can buy it for 26 times earnings, that's a ding, 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 ring the bell event.
Yeah, for sure.
I know I can, I have a candidate for it. It doesn't work 100% of the time, obviously.
Well, yeah,
No,
nothing does, right?
nothing does.
Yeah.
But I've got a good, the odds are in my favor for this stock to double in the next 12 to 36 months. And on a stock like Snap, I feel really confident that it's going to happen within the, and that confidence, by the way, comes from doing this exercise on stock after stock after stock over the last 25 years. Okay. Yeah. So I have a pretty good idea what's going to pop and what's not going to pop. And what I'm trying to do here, I had a really good professor in graduate school that taught me stock analysis and valuation. And we did a long research report on a publicly traded stock that, after a week's worth of work and handing in our assignment, he tossed our papers in the trash can. And he said to us all, the price of a stock is what somebody is going to pay for it down the road. And we were a little bit aghast because we had worked so hard on our DCF analysis. Mine was, I believe, American Airlines. And, but he was right. Ultimately, what we're trying to do is identify stocks that people are going to want to buy down the road. And earnings growth is a huge, huge variable in algorithms that are controlling not just billions of dollars, but hundreds of billions of dollars. And that buying power, if we can identify it first, we get in early and the stock doubles and we get out, right? It's remarkably simple, but it's the only number I believe you'll ever need to find stocks that can double in value. We gave a couple more names, David, this morning. One, I mentioned American Airlines from my graduate school days, but United Airlines was on that list as well this morning. And you can see here that United Airlines is growing earnings from $10.25 to $12.65. And at $100 a share, just back of the envelope, you can see that at 106 divided by 10 and a quarter, we're trading a stock trading around 10 times earnings, right? And a stock that's going to grow earnings by 20% or more. I love that. I mean, and this theme plays out over and over and over again. So it's these are, again, stocks that I believe can double in 1 to 3 years. But you want to know something amazing, David?
Yes.
Well, my life's work has been taking that 6-year holding period of the money management firm I used to run and driving that down. And with this one number strategy, we've cut it down from 6 years to 1 to 3 years. But in the presentation that we're going to share with people at the top of the hour, I believe, that holding period can drop to as little as 3 to 4 weeks.
Yeah, which is incredible. You're talking about 6 years down to 3 weeks. And that's just, it changes the ball game completely, because now you're just doing that over and over again. It's just like when you have a daily trade strategy, you don't need to make quite as much on each trade because you're just going to be doing it so frequently, right? It's the return plus the frequency, or multiplied by the frequency. So it's a huge difference to take something that you can do in 6 years and be able to do it even every month, but this is even less than that.
Yeah.
So it's really incredible. And as I was mentioning this morning, when I saw this, I first met you and saw this program a few months ago, and I saw, okay, so on, when I initially was looking at it, I was looking at the stats. I was like, okay, so we're making about 4 or 5% every trade, and we're doing that a couple times a week, and that comes out to a really good return on an annualized basis. And I said, okay, that's pretty much in line with a lot of the other things we do. And then I realized that was on the stocks and not the options, and that the options does like 7 times that. And it's like, okay, well, now if we use the options, now we're talking about like a 30-something percent return every couple of weeks, and we're doing it a couple of times a week.
Yeah, it's really cool. That's an annualized return of 55%, by the way, on a stock.
Yeah, the 55% on the stocks, which is still great, right? Because I mean, if you just follow the S&P, it's half that, right? So it's or if you're in a great money market, it's half that. So it's like,
right.
There's nothing wrong with that at all. But like, then that's not even with the options. I was comparing that to our options programs.
That's right.
Where we're taking daily trades and making 4 or 5%. So really pretty cool.
Well, and hey, real quick, David, I thank you for the sharing that. I want to make sure folks realize too that everything that we're talking about here is going to be turbocharged with the aforementioned options that David is talking about, because you can take and we're doing level one, very simple option trading on this system that you can learn about if you stick around. And some of you may have already seen the presentation, so you know what we're talking about. But wow, and it's based on a statistical formula that was discovered 200 years ago.
Yeah, it's like you said earlier, you're not inventing the wheel, but you're turbo boosting the wheel. This is going from, inventing the wheel to a turbocharged race car. It's like it's taking something and really figuring out how to really maximize it. And that could be the difference between, kind of just lackluster, results to incredible results. So really pretty cool. For those that are taking that trade that you gave earlier, on the on Salesforce, I was going to say on the CRM, which is the ticker, on Salesforce, that's not something they need to manage. That's something that's going to just expire on Friday, and they don't need to worry about, right?
Yeah, the if that trade goes well, it'll expire worthless, and you just keep the premium that you wrote,
Yeah,
less the amount of the insurance. Because again, you don't want to get in a situation where Salesforce goes up 50%. Got something crazy. I don't think that's going to happen. But when doing this particular strategy, we always insure it with a call option that's further out of the money.
right. So we made $1 on the sell to open. We spent 50 cents on the buy to open. We netted 50 cents on each contract on the spread, and then you can multiply that out as much as you want for however much you want to risk, and we're good to go on that. All right. Well, let's see. We have a couple questions in the chat here. So just to clarify, because there are a bunch of different things being talked about in the chat. So for the normal Two Sigma program that JD's been talking about for the past few minutes, we're trading, and we're going to see a deep dive into that in just about 3 minutes. We're talking about regular stock purchases or regular call purchases, simple level one purchases. For the trade that we did a few minutes ago, that is, a two-leg spread that you want to take
I
as a
brought people
spread.
into the inner sanctum there,
Yeah,
David,
yeah,
and
yeah.
I apologize if I
No, that's okay.
confused
They're
you,
used to
but
it. They're used to
I
it. We're
thought, you
going
know
to
what?
do spreads all day, every day. So yeah,
Okay, good,
all good.
good. And I do, by the way, I do have, we promised going over some of the Two Sigma stocks from my dashboard. So if I have a few minutes, do you mind if
Oh
I
yeah,
go into
sure.
that?
Sure. Yeah, we'll
Quickly?
take as much time as you want to give us, for sure.
Yeah, I'm going to share my screen again. And this time I am going to bring up my dashboard, which for our VIP members, you all have access to this on TradingView is the platform that we use for this dashboard. But a stock I thought was interesting just because it's been in the news, Cracker Barrel. Okay, you can see on this chart now. If we didn't have our green light, red light um, uh, system overlaying the chart, right? Just look at, this is a chart, typical chart where, stock's going down, stock's going up, it's going down, it goes up, how do you know when to get into a particular stock? And that's what's so beautiful about this system, again, developed using statistics that were developed some 200 years ago, and gives us some very, very strong reliable probabilities that when we enter a trade, it's about to take off. And so we got a green light go signal on Cracker Barrel on Thursday, August 7th, right around 56, looks like $57 a share. And you can see, what is that? 1, 2, 3, 4, 5, 6 days later, there's your red light to exit the trade. So on this part, and by the way, this is not a trade that I shared with anybody. it would be impossible to follow every single green light, go, red light, stop trades. So we do exercise some discretion, which means we're going to miss out on some of these opportunities. But I thought this was just a good example for those of you that are familiar with what we're doing here in Two Sigma. You know, and a simple call option on this Cracker Barrel at the time would have yielded, I'm pretty sure, would have yielded some spectacular results, right? The stock was up from $57 a share to $62. That's $5. That's, you know, almost 10% just on the stock.
Yeah.
David. So that's one name that's really interesting. And let me pull up, I've got a couple other names here. These are names now. These are very much live trades, not that I've made, but we are watching, and I am watching these closely for a trigger to enter. The first one is Groupon. And here too, by the way, going back in time, you can see the effectiveness. We got a green light go here on Monday, August 4th, and a red light on August 7th, which was after its earnings report. Again, this one blows me away, David, because this company, its earnings report, there's a reason why this stock popped. It was very, very good earnings, right? That beat expectations. And ever since then, it's been selling off. Now, you're going to learn in a few minutes about what these blue bars mean, but that's when a stock is entering the Two Sigma zone. It hasn't triggered yet, but boy, it's close, right? At 24, it's down another 5% today. This is a stock I very much am excited to see a green light, but I'm waiting. I'm not entering the trade until I get that green light go to tell me the stock has a 97% probability of taking off, right? So that's one name that folks can keep an eye on. Another one that's a big stock that folks follow is the crypto stock. It used to be called MicroStrategy, now just Strategy. And this is interesting here because we did get a green light go on Wednesday, August 20th. And on this one, which I do follow, we traded, I'm just going to look at it real quick if I can. On August 20th, we traded Strategy. Oh, we did trade it here. I'm sorry. Where I used discretion was on the exit. So 2 days after Strategy popped, and I had on the stock in 2 days, I had a 4.5% gain, and on the option, something like 50% or thereabouts. And I'll tell you exactly what the option was. If you're a member, this was, I'm sorry, 27% in 2 days on the option on MicroStrat or Strat.
In 2 days.
In 2 days.
Yeah, that's crazy.
But I exited, and I had good reason for exiting. I on a macro basis, I'm expecting the market to decline. I'm not looking for anything extreme, mind you, but I do want the macro to be in a little bit better condition for me to pull the trigger again. But I'm after exiting here on August 22nd, I'm chomping at the bit, down 3.25% today. I thought maybe we'd get a blue bar. We didn't. So we're going to need a little bit more selling in Strategy. But again, for folks that are not members yet, if you're just considering and you want to, see how we do here, keep an eye on Strategy and Groupon. Those are two names that we will be trading. I guarantee it at some point in the future here in the Two Sigma ecosystem. So those are two quick names I wanted to share with folks, David, and I'll leave you to it then.
All right, very good. So for the people that are asking questions about exactly how those green and red indicators come up and how those blue bars work, we're going to show you a replay of the presentation that Nathan and JD did this morning, and we are going to play that now. And JT has extended the opportunity that he provided with everybody to get into the program this morning to everybody that's here this afternoon. So the offer will still extend to all of you if you weren't able to get in it this morning. I know we actually have people that came this afternoon just to watch it again. They were in it this morning. They got in the program already. They just want to see the presentation again because the information is so different than what we normally get. And of course, we have so much information to provide. We fly through these slides at light speed. So they just wanted to be able to see it again. So it's always cool when we have people who they already own the thing, but they want to see the presentation one more time.
Yeah, that's wonderful.
One question to ask you while we're still together here: the trades for the program. Do you typically put out the alerts a particular time of day, or is it really just whenever that signal triggers? Whenever you find that green light, that's when you do it.
Again, running a service like this, it's always difficult, and we're trying to make it as easy for folks to follow. So we don't want you right in the middle of a dental procedure and there's the alert, right? No, what I try to do, I don't hold me to it, but in the last hour or so at 3:00 Eastern time is when we typically will shoot out the alerts to either enter or exit a trade.
Okay. So people know they can pretty much look for it at the end of the day then.
Oh my goodness, I'm seeing double.
Oh yeah, we're doubled up here. We're doubled up. Yeah. Oh, I'm gonna play back. I was just loading it up while we were finishing talking. I'm gonna play. So it's you, me, Nathan, and you again, and we're gonna do. We're going to show the replay of the presentation that you guys gave this morning. But I appreciate you coming back, visiting us again, giving us a trade, and just kind of going over some of those charts and opportunities again with everybody. Thanks, JD.
Okay, David, I greatly appreciate it. And I do this. I'm not going to say it, but I will say it. I would do this for free if I could. I love what I've discovered here. It truly is my life's work, and I'm excited to share it with everybody. And when you join, I'm going to make the preemptive. When you become a member, listen, I'm here for you. I make myself available 24/7, and I'm excited about the journey. So enjoy the presentation, folks, and thank you, David.
All right, thank you, JD.
Since April of last year, we've had 106 signals, 80 winners, 26 losers, average return about 4.5% on stocks over the course of 16 days, which just take that in for a moment. The average stock only moves right around 5% a year. We're averaging a net gain, including losers, of 4.5% in 16 days, JD is, which is remarkable on an underlying stock. Average return on the options is really big. About 37%. Yes, that is losers included. If you guys know, I have an average return on, something like automated options of 10% or something overnight options of 3% that I'm compounding. We've got 37% when you blend those in. So pretty powerful stuff here. But just to be very, very extra super duper clear, every trade that we're going to talk about is a real alert. It is a real timed up trade. Because remember, timing is important. JD actually timed these up in real time. But obviously, that doesn't mean everyone's going to be a winner. What we're trying to do, as always, is give you guys an edge. Show you something that we think really works in real markets. It's not a miracle system that means you should go all in on JD's next idea. Losses are part of the game, but I think this is a pretty cool edge, and it's specifically something that I don't really specialize in. So I'm hoping this is a bit of a light bulb moment for all of you guys who are here today. So before we get rolling, take a look at this. I think everyone in here probably knows what the signal means, right? Green means go, red means stop. If you didn't already know that, you might need to go back to elementary school, because this is pretty basic stuff. Now, what if I told you that your timing of entries could be as straightforward as reading a stoplight? Well, according to JD, it now can be, because thanks to a simple start-stop system he developed, when the light turns green, we can buy the exact stocks that Wall Street algorithms are most likely to pile into and drive higher, and just close out when the light turns red for what could be really great returns that JD's proven out in real time. Like April with Spotify, anyone could have entered when we got this green light right here. You can see a really nice timed entry, and then the exit there when we got the red light. And our research shows that could have been a 49.75% return in just a few days. Or the very next trade, again, one that he found in real time, PAHC. Anyone could have seen the green light, got into a trade, and then a few days later, we got our red light there. That one was a 75.93% return if you trade just basic call options. Now, as straightforward as that might look, it's built on arguably the most powerful force in the entire stock market. One that legendary hedge funder Joel Greenblatt called the secret to investing. That's a pretty bold claim from Joel there. And Warren Buffett, obviously, everyone knows Warren Buffett, but not a lot. Poor Charlie doesn't get as much spotlight as Warren, but lifelong business partners said, this is the basis for all intelligent investing. In fact, this force is the foundation of everything Buffett built his empire on. But unlike Buffett, and JD alluded to this, I alluded to this as well, most of us don't want to wait 10, 20, 30 years to get a stock to mature. Instead, JD has managed to do this within a matter of days over and over again, like DVA. Well, Warren Buffett owns about 32 million shares of DaVita, and he's going to wait years and years, like always, to watch it mature. Back on November 4th, JD spotted a green light on DVA and told his readers to take immediate action. And then we got a red light just 9 days later. Anyone who placed basic call options could have claimed 131% on one of Buffett's favorite stocks, all in a fraction of the time that the Oracle of Omaha would have to wait to see that same kind of return. Now, results like that are exactly why I looked around. I literally scoured. I probably had, maybe 15 conversations with traders before we brought on JD to introduce him to you, because I wanted someone who was more on the value side, someone who could shed light on things that guys like me and Graham and Lance and even Roger don't really talk about a whole lot, how to time up these value positions and scooping them up right before they might make one of those big runs higher. And by the way, trading a whole bunch of stocks that I never touched, like DaVita, like RGTI. And so it's all thanks to this start-stop method that's capable of delivering winners, not in a few years, not in a few months, but in a matter of weeks or even days, just like we had on Costco, one of my favorite stocks that's been a little rough lately, 65% in 7 days back in the summer, or 85% on BJ in just 5 days, or like I showed you just a little bit ago, 129% on RGTI in just 13 days. Now, to be clear, each of these stocks were picked in real time, sent as an alert to a small group of subscribers. These are not hindsight. JD said, oh yeah, I totally would have bought this back when it was down here. No, he found these in real time and said, these are buys in real time. And in just a few minutes, we're going to share how you could receive the very next alert and join JD on this revolutionary approach to the market. But not just that, we're also going to reveal how he boiled down the most powerful force in the market to a simple start-stop tool. And yes, it really is that simple. The 19th century secret that could help transform anyone's trading today, what most traders can't do that's killing their results, and the statistical edge anyone can use to identify stocks with a 95% plus probability of recovering over time, and a whole lot more we're going to get into in this session. So thanks for being here, by the way. Those are just a few of the breakthroughs you'll hear from